In this video, I'm gonna give you an in-depth look at the most commonly used FICO scoring method that most lenders for mortgages use today. You're gonna wanna grab a pen and a pad and take notes because we're getting into it right now. Hey everybody, Dietric Williams, Realtor with Compass here in Los Angeles, and welcome to Info on the Go, the show where I give tips, tricks, and insight on how to buy, sell, or invest in real estate in Southern California. If that sounds like something you're interested in, please make sure you hit that subscribe button, ring that bell so you're notified when I drop future editions onto YouTube. Now, my team and I, we're getting calls from people who want to know what it's like to eat, sleep, work, rest, and play in the City of Angels. And if you're thinking about relocating to the Los Angeles metro area, please give us a call, shoot us a text, send us an email. However you want to get in communication with us, just know we got your back when moving to Los Angeles. Now, you probably think that you only have 3 FICO scores, one coming from Experian, one coming from Equifax, and one coming from TransUnion. That's actually not the case. You have several different FICO scores, and depending on which lender you're talking to and which type of loan you're going for, the FICO score is going to vary. Now, there's not going to be a big difference between all of them. They should be roughly close, but in the reporting, that's where it can happen at in terms of the differences between what you see in one score, like say a Credit Karma, and what you see from the free score you may get from say American Express, which ties into Experian. I'm going to explain why that is. Now, FICO releases an updated version of the algorithm every few years, and they supply that to the lenders. However, it's up to the lender's discretion whether they want to use that new version. So understanding the algorithm from a consumer perspective is very important. Keep in mind, the FICO score is just one piece of the tool that they use to measure your credit worthiness. One big component of that is your credit report. Think of that as your financial resume. It lets companies know what you've been doing, what you've done, and what you're currently doing right now. Now, when you go apply for a mortgage, lenders typically pull all 3 credit reports from Experian, Equifax, and TransUnion. And they also pull a FICO score to go with each one of those credit reports. However, the type of scores that they pull are often older versions based on guidelines set by Fannie Mae and Freddie Mac. So it's important to understand how these scoring systems work when you go to apply for a mortgage. So I'm going to talk about basically 3 types of score. There's FICO 2, which is Experian, FICO 4, which is TransUnion, and then FICO 5, which is Equifax. There are also 2 newer versions in FICO 8 and FICO 9. FICO 9 is the most current version. It's not typically used by many lenders because it's brand new. And then there's FICO 8, which is still newer, and some institutions are taking advantage of it. And you probably see that when you go to pull your credit scores through your bank or someplace like mint.com or Intuit, TurboTax, whatever the case may be. They typically use FICO 8. Now, FICO 8 is typically used for auto loans and bank cards or credit cards. And FICO 8 is more sensitive to credit utilization. That is the amount of credit you have outstanding versus the total amount of credit that you have the capability to pull. That ratio is what they call credit utilization, and they usually like to see it somewhere at 30% or lower. The big reason that this is important is because the credit utilization rate comprises 30% of your FICO score. Another 35% is your payment history. So as you can see, those pieces comprise 65% of your FICO score. They are very important to know and very important to watch as you're going to apply for a mortgage. Now, there are some benefits to using FICO 8, and one of them is if you have collection charge-offs that are $100 or less, they typically will not show up in your FICO score if it's running a FICO 8. Also, FICO 8 is generally more forgiving if you have one-off late payments of 30 days or more. Typically, if it's a different type of FICO system, you will see that and the lender will see that, and it'll be a ding against your credit. Now, FICO 9 is similar to FICO 8, but it differs in how it handles collections and rent payment. Now, FICO 9 treats medical collections less harshly than it does for other collections in your credit report. Additionally, it doesn't include collections accounts that have a 0 balance. If you had a credit card that went into collections but later paid it off, FICO 9 will not count that against your credit score. Now, just because collections with a 0 balance will not show in your FICO 9 doesn't mean that lenders will not see them. In fact, when they pull your credit report, they're going to see that. So just keep that in mind in terms of how that's going to affect you going to apply for a mortgage. And finally, FICO 9 also uses rental history. So this is important for those who don't have a lot of credit history or no credit history at all. They can use your rental payments to basically boost your score. Now keep in mind, this is still fairly new and the landlord has to actually report this. And because it's new, a lot of landlords aren't doing it. So you won't see it widely used, but I suspect that will change as we continue on into the future. I told you before, you probably can see your FICO 8 score through companies like Mint or through your bank, but you cannot do that with FICO 9 because it's so new. So you can pay to have a FICO 9 score revealed to you, but there's no free version of it because it's still brand new to the market. And we're talking about the FICO algorithm, but I'm gonna talk about another algorithm. It's the YouTube algorithm. And it would be a huge favor to me if you would kindly hit that like button because it lets the YouTube algorithm know that you are enjoying the content. And hopefully it will push it out to others who need to see and will enjoy the content. So thank you for hitting that like button. Now, when you apply for a mortgage, lenders are going to pull all 3 credit reports, and usually they get it bundled into one. They're going to see all 3 of your scores, and typically what they're going to take is your middle score. So let's say you have a 660, a 680, and a 700. They're going to take the 680. Now, if you're going to apply jointly, like with a spouse or with a friend, they're going to take the middle lowest score, meaning you might have a 680 or 700, but the person that you're going into the deal with has, say, like a 590, a 610, and a 630. They're going to take the 610, even though you have a 700. So it's important to know that when you go to apply jointly, they're going to take the lower middle score of the person who has the lowest score. Now keep this in mind if you're going to apply for a loan that needs a specific score requirement. So if you need a score requirement of 580, you need to make sure that your middle score is at least 580 so that you can get that loan. There are some exceptions though. So mortgage lenders may use a different scoring system for one that's not backed by Fannie Mae or Freddie Mac. Also, you may still be able to get a loan if you don't have any credit history at all. So remember, the FICO score is just one piece of it. They're also going to dig into your credit. So you can have a great credit score. Let's say you have a 700 score, but still not get the loan. You still might be denied to get the loan. And the reason could be anything. You could have recently applied for a bankruptcy. You could have a foreclosure on your records, or you may have an account in collections that has an extremely high balance. So even though the account is in collections and the rest of your credit is good, so your credit score is great, if you have $10,000 or $20,000 in collections, that can hurt your chances to get a mortgage drastically. Now there's other factors like the home's location, the loan type, and how much you're going to put for a down payment, which could have an impact on whether you get approved for the mortgage loan and what your terms and rates and conditions are going to be. The FICO scores that most lenders are going to use, and even FICO 8 and FICO 9, have a range between 300 and 850. Obviously, the higher your score is, the better. Now, there's another scoring system that is a competitor to FICO, and that's called the Vantage Score. It uses the same 300 to 850 FICO range. Now, Vantage Score is pretty accurate. However, it's not the industry standard. So when you go to apply for a mortgage, ask the lender which scoring model it uses. Now, I'm presenting all this to you because a lot of people have credit challenges, and I understand that. I am one who back in the day made some bad decisions and totally jacked up my credit. If you are a college grad, you understand that one of the first things that happens when you step on that campus is you get bombarded with companies that offer you swag and say, sign up for this credit card. It's essentially free money. And when you're a college student and you may be struggling to figure out how you're going to pay for books or eat or anything like that, you may decide to use this free money, but it's not free. It comes at a cost. Oftentimes, we're not taught the financial literacy to avoid going into credit card debt, and it affects us in our adulthood. And that's why I'm doing this right now, because I want you to be able to get out of that trap. If you have credit challenges, this is the way that's going to help you get out of that. Now, here's the deal. There's a couple of different ways that you can boost your credit score. One is make sure you pay your bills on time. Even if you're only paying the minimum, which I don't really suggest, make sure you pay your bills on time, because remember what I told you, your payment history and any type of late is going to impact your credit score significantly. So you don't want to have a lot of late payments on your credit score or in your credit report, because that's going to significantly lower your FICO score. The other way is to pay down your credit card debt. Remember, I told you your credit utilization is 30% of your FICO score. So if you have a $5,000 credit limit and you've maxed out that limit, using your credit card to do whatever, it's going to hurt your score drastically. So one way to lower your credit utilization is to pay down or pay off those credit card debts. That's why I don't encourage just paying the minimum, because the minimum, you're really paying interest, even if you cover the entire interest. So if you're only paying the minimum, you're going to find your balance continue to grow and grow and grow. And that's where people get trapped out. So as much as you can, pay it off or pay it down, and do it quickly before you go to apply for a mortgage. And then finally, don't apply for new credit cards or get an auto loan or anything like that just before you go to apply for a mortgage. The reason is because every time you go do things like that, it's a hard inquiry, and those hard inquiries affect your score drastically. Now, if you're pulling your own credit and you're pulling your own FICO score, those are soft inquiries. You don't get hit for those. And an additional piece to this is make sure that you're also saving money, right? Because not only is your down payment going to come into effect, but also you're going to need money for closing costs. So what I typically tell people is whatever the price of the home is that you want, save about 7% of that. 3.5% down if you're going FHA, and you probably need another 2 to 2.5% for your closing costs. And I discussed those in a different video, and I'll leave the link to that right in the description below. So if you're having credit challenges, or you just want to check and see where you're at in terms of your credit scoring and how everything looks on your credit report, I encourage you, constantly monitor it. Now, you can go to annualcreditreport.com, and they offer you 3 free credit reports. They won't give you a score, but they'll give you 3 credit reports, 1 from each bureau. So 1 from Experian, 1 from Equifax, and 1 from TransUnion. Typically what I tell people is if you are going to apply for a mortgage, then pull all of them at the same time, just so you can see what's on each of them across the board. But if there's going to be a little bit of time to when you're going to go apply for a mortgage, I say pull 1 report every 3 months. Essentially, that means you can pull 3 reports through the course of the year. They should be roughly the same in terms of what's in them, but sometimes there are some variances. But you can use one, start your strategy to figure out whether you need to essentially dispute some items or what you need to pay down, or if there's collections on your account that should no longer be there, because sometimes there are some collections on accounts that the statute of limitations, is what I call it, has transpired, and they're still on credit reports. Now you have to go dispute this stuff, and it's important that you do so, because if you do have old collections or old accounts that are negatively affecting you, you want to get that stuff taken care of so that it can boost your score right away, right? Again, you can use each report every 3 months to monitor and track your progress. All right, folks, so there you have it. FICO 2, FICO 4, and FICO 5. Those are the 3 that you really need to pay attention to when you go to apply for a mortgage, and they're going to tell you exactly what is in your credit report, and these are the ones that the lenders use now. Again, there's no problem pulling your FICO 8 from, Mint or, your bank or your credit union, anything like that. Just understand that most lenders don't use that score because it's not the industry standard, and they're not obligated to use it. They are using FICO 2, FICO 4, and FICO 5, which have been around forever. So when you go to apply for a mortgage, again, make sure you ask them, what scoring model are you going to use? That's going to help you strategize how you need to tackle any credit challenges you have going into the future. Now, if you're going to apply for a mortgage in California, you want to watch this video right here, where I have a lender discuss a lot of different programs that are out there to help you as a first-time home buyer. You definitely want to make sure that you watch that one.